Hello and welcome to the Currency Exchange, NatWest Markets FX podcast, where we break down the major themes and events driving markets this week and in the weeks ahead. Today I'm joined by Alvaro Vivanco, who is our head of EM and ESG research here in NatWest. Alvaro, a lot has been happening in LATAM since we last spoke. Could you give us a quick update on exactly what has taken place?
Yes, thank you, Eimear, and thanks everybody for joining us this week. We thought it would be worth doing a whole podcast just on Latin America, given all that has happened over the last few weeks. But essentially, just to give you a little bit of the background, what happened is that the Mexican elections, in which the governing party got a stronger majority in Congress than expected, kind of spur a new revisiting of the themes and the levels and the risk in, I will say, especially in Mexico, obviously, because that's where it happened, but also kind of brought back the fears of policy concerns in emerging markets. But given that, Latin America is where a lot of the political changes have happened over the last couple of years, we all of a sudden started to hear a lot of concerns and questions, not only about the institutional reform that will be possible in Mexico, but also things like the pension reform in Colombia or the fiscal health and the spending expenditures that we've seen in Brazil over the last couple of years, really, since the new administration. So really, it was kind of like a 180 shift in market perceptions of risk, that all of a sudden a lot of these local idiosyncratic factors came to the forefront and caused obviously a repricing, especially on the currency side, but also on local rates. So we saw big sell-offs in things like the Mexican peso, went all the way to 1850, real almost to 570, and that caused a little bit of contagion into other markets that were not necessarily impacted directly in terms of the policy risks and the policy concerns, but because the carry trade, and that's one of the reasons why everybody had been so supportive of these currencies. The carry trade got a little bit shocked in Mexico. You saw a little bit of the repercussions in other markets as well. So as a result, we still have, since then, there's been a little bit of a recovery in these markets, but still the levels are very different than we had a couple of months ago.
I guess, how worried are you about these political risks in Mexico, and are they particularly new?
Well, that's the interesting thing, right? Is that they're not necessarily new. These are things that have been happening for the last few years. In the case of Mexico, obviously, the current government has been in place for the last 5 years. We've seen kind of the erosion of some of the institutional quality. But again, because of the Mexican elections, everything, all of a sudden was in people's mind. I'm not too worried about any kind of changes in terms of central bank institutions. I think that we'll have new heads of central banks in places like Brazil and Colombia over the next 6 months or so. There's always, a little bit of pressure from presidents and politicians that central bankers could do a little bit more, could cut rates more. But I think in terms of kind of the institutional framework, the setup in Latin America, I think a credible inflation targeting central bank is here to stay. So I don't think that is a worry in any country. I think that the fiscal is something that we have been talking about for the last few months, and it's something that we need to keep an eye on, especially in places like Brazil, Mexico, Colombia, where there is a little bit more pressure to do a little bit more. I think at the end of the day, the market will set the limits of how much ministers of finance and presidents can push this, but it's something that, to be honest, I think was underappreciated for the past couple of years in these high carry currencies, and I think now is something to watch and keep in mind when analyzing the valuations of this. In the specific case of Mexico, I think that So the concern is that the upcoming government could push towards judicial reforms, and this is not necessarily something that's going to impact local assets, but that it could hinder direct foreign investment, right? That a lot of it is going into Mexico because of kind of the decoupling of U.S. against China. So I think that that's something again that we need to see exactly how the reform materializes, how aggressive it is. But at the end of the day, when it comes to kind of the competitiveness of Mexican exports, and these are exports obviously mostly to the US, I think geopolitics and the relationship between China and the US will be the most important one. Mexico remains a very favorable destination for investment. A lot of stuff is very competitive to make in Mexico. So I think at the end of the day, that will prevail. So the bottom line, if we look back at what has happened in Latin America, is that I think some appropriate repricing of local assets took place. I think some of these concerns about policy are valid, but for the most part, even at these levels, I think a lot of these risks are already priced in, and we just put out a piece this week kind of highlighting our favorable view for currencies in the region. I think that the levels combined with high level of carry in a lot of places make a lot of sense here.
And touching on carry, which has been such a big driver of the MFX in recent years, what do you expect from central banks in the region?
Yeah, it's going to be very different, right? So we have all the way from Brazil, which basically has stopped the easing cycle. The market is trying to price in some hikes over the next couple of months, which I think is a little bit too early. But the carry in Brazil should be stable for the next few months, and it's very decent carry, right? Even with high yields from the dollar, the levels of carry and carry to volatility that we're seeing in Brazil is not what what we saw at the peak of the inflation fears, but I think is very respectable and very attractive. In other cases, in Mexico, we see the potential for some cuts over the next few months. Inflation has been kind of mixed, right? Core inflation remains a little bit of a concern. The central bank in Mexico has been very, very cautious, keeping an eye not only on local developments, but also at the Fed. I think U.S. election is something also that's playing into their minds. But I think to the extent that the Fed starts or really gets going with the cycle, we should see some modest easing in Mexico. Again, against a very, very cautious and moderate approach that has been in place for a while in Mexico. In the other cases, Peru and Chile. In Chile, I think there could be a little bit more of cuts, but the bulk of them have already happened. Same thing in Peru. We already have seen the central bank holding rates for the last meeting. So I think that in those two cases, it's more like low carry and a different kind of trade. The one that is a little bit more uncertain is Colombia. I think that this is where we could see more dovish surprises. Inflation has been a lot stickier for a variety of reasons in Colombia compared to the other emerging markets. The central bank has been more willing, I think, to kind of internalize these political pressures and continue to cut when technically it might be more difficult. So this is the one where I'm a little bit more concerned that we could see, easing too quickly and too far against what's happening on the ground, and especially in terms of inflation.
I guess, what about the external environment, which is obviously clearly a big factor for EM? Do you think it is going to be supportive going forward?
That's a very good question. And obviously, for a while, it was the only factor that mattered for LATAM, and everybody was kind of chasing the carry, which in some cases we thought that it didn't make much sense. But I think now, essentially, we have kind of a positive window for these markets. I think we are kind of consolidating the case for a Fed cut. We'll see exactly when that happens, but obviously the latest numbers from CPI in the US have been constructive. The economic conditions are supportive of cuts in the US, which I think will be helpful. It's already to some extent priced in these markets, but I do feel that will help sentiment. And at the same time, I think it's too early to really start pricing in any concerns about the U.S. election, right? I think that we're right in the process of the nominations of each party. Polls obviously have moved quite a bit over the last few weeks, but I think for the next few months we should have a positive window for Latin America, in which it's not only the levels, right? It's the combination of levels. The valuations are fairly attractive. The risk, as I said before, I think for the most part already priced in. And then on top of that, you have very, very attractive carry that is making a difference, especially if the Fed starts the easing cycle.
I guess with that said, what are your favorite picks for LATAM FX?
So we are bullish across the board, but I will say that Brazil is definitely at the top of the list. It checks all these boxes, right? The external accounts have been positive. The fiscal, there is some slippage, but it's not really something that should be particularly concerning. The levels, even the last couple of sessions, the real has weakened a little bit, which I think is a nice entry level for kind of medium term trades. The cars is strong, so I think that the real is definitely a very solid case. Then I will actually pivot to the low carry currencies in the region. So things like Peru. I think Peru has been a very underappreciated macro story. We've seen pretty significant recovery. Inflation has basically come back to the target and the long-term average. The central bank is pausing in terms of cuts. The terms of trade, obviously, for Peru have increased a lot because of the rally in commodities and metal prices. So I think valuations are very, very attractive for a very, very different kind of trade, right? It's very low beta to the dollar. Same thing to some extent with Chile. Copper is suffering a little bit the last few weeks, but I still feel that above 900 is a decent long versus the dollar. And that leaves Mexico as somewhere in between. I think that you have to be a little bit more tactical, but our bias is still to be positive and to kind of price out or fade this local risk, which I don't think that really are going to be here for very long. And then on the other side, Colombia is the one that we have been more concerned. The valuations are still a stretch. As I mentioned before, the central bank is less clear, a little bit more divisions. The policy risks are, I think, higher than in the rest of the region. So that's the one we are a lot more cautious about.
Okay. Well, on that note, that's probably all we have time for today. Alvaro, thank you so much for joining me. If you did like the podcast, please do remember to click like and remember to subscribe. You get the latest episode first. Thanks again.